Thank you for being on this video with me. My name is Rodney Constable. I am the president and founder of Simple Market Signals at simplemarketsignals.com. Simple Market Signals helps you understand the level of risk in the stock market through our proprietary market risk signals that are emailed to you every weekend in our weekly stock market-based newsletter, all for less than $20 per month. Today we will be doing technical analysis on the S&P 500 for Wednesday, April 29th, 2020. For this analysis, we will be using stockcharts.com. That is the charting service that I use and pay for, and I will leave a link to their site in the description box below this video. Today we were up 2.66% on the S&P 500 and closed at 2939.51. What we're looking at here is the intraday chart of the S&P 500. So this is just today's trading. Each candlestick represents 1 minute of trading on the S&P 500. And as you can see, it was a pretty bullish day all day long, a little bit of a pullback during the last 15 minutes, but still we finished up over 2.5% and closed right there at 2939.51. One of the things that I've been thinking about here over the last few days, and so I started to do some analysis on this today, is every time we get positive news from Gilead, the bioscience company, on the possible treatment that they're working on for the coronavirus, for COVID-19, we seem to get a big pop in the stock market. So I did a few overlay charts here that I want to share with you. What we're looking at first is a daily chart for the last 2 months of the S&P 500, and the black line is Gilead, G-I-L-D, ticker symbol right there, Gilead Sciences. And what we can see here is there is definitely a very high degree of correlation between the direction of Gilead and the direction that the stock market goes. And what we're looking at now is an hourly chart of the S&P 500. Again, the black line is Gilead, G-I-L-D. And this is the last 15 days of trading. Again, you can see that whichever direction Gilead goes, the stock market pretty much follows. And then again, taking a look at a shorter term time frame. Now we're looking at a 15-minute chart for the last 10 days. And again, guys, look at the positive correlation here between Gilead. Every time we get a pop up on Gilead, look at what it does to the stock market. And then as Gilead pulls back, it pulls the stock market back with it. Again, Gilead up, stock market up. Gilead down, stock market under pressure. And then, of course, today we had a big gap up, and it's really easy to see on a 5-minute chart. So again, just the last 5 days of trading, 5-minute S&P 500 chart, Gilead overlaid. You can see when Gilead is under pressure, the stock market's under pressure. So when there's negative news around Gilead's treatment for the coronavirus, the stock market is under pressure. We had positive news overnight about some of the tests that have been ran on the Gilead treatment for coronavirus, and you can see that that led to a big gap up in Gilead and a big gap up in today's stock market. So, I just think it's really interesting that these are very, very news-driven markets, and it does make some sense, but we also need to understand that this is going on, and so we need to be careful. Next, let's take a look at the year-to-date chart of the S&P 500. So each candlestick on this chart represents 1 day of trading. And what I've done is I've overlaid the Fibonacci retracements for the entire correction that we've had from February 19th, where we hit our highs, to March 23rd lows. And what we can see here is that we closed right at the 61.8% retracement of this entire move. So the question now becomes, now that we've closed right here, right at that 61.8% retracement of this entire move, will that have any relevance? Will this stop us? Will it be more difficult for these markets to move higher from here? Only time will tell, but just remember that these are very news-driven markets. The market is not acting, of course, on fundamentals. We have no idea how bad the fundamentals are going to be for the next, 3, 6, 12 months. We just know that they're going to be bad. So this is not a risk-free market by any stretch of the imagination. And the higher the market goes from here, the more likely it is that we're going to have some type of a pullback at some point in the not-too-distant future. If you are along these markets, please make sure you keep your stops tight. If the market starts to roll over, you may want to take some profits. Don't forget to subscribe to this channel. Please give me a thumbs up on this video. And also, if you are a financial advisor or an individual investor that manages any of your own money, including in your 401k, your 403b, any of your IRAs, or of course your trading account, I would encourage you to take a serious look at Simple Market Signals, which is my personal risk management model that I have now made available to the public. For those of you who would like to learn more about how Simple Market Signals can help you in both up and down markets, here is some additional information. As part of the Simple Market Signals model, there are two powerful indicators. There's a risk-based indicator and a trend indicator. As a subscriber to Simple Market Signals, you will receive information on what the risk level is in the overall stock market, as well as what the trend direction is in the overall stock market. So this really, really helps. The way we disseminate the signals to our subscribers is via our weekly emailed newsletter. So within the newsletter, every weekend, you will receive the proprietary risk level signal on the overall U.S. stock market. You will also receive the proprietary risk level signal on all 11 major sectors of the S&P 500. You will also receive the early bird indicator, the trend direction signal on the overall U.S. stock market. You will have market and sector performance information on multiple time frames. You'll get market commentary and a weekly recap of what happened in the market. You'll have technical analysis information, fundamental analysis information, and yield curve information. There is a ton of information in this newsletter every weekend. And a subscription to Simple Market Signals is just $19.95 per month. That's less than 67 cents a day. It's billed monthly on your credit card. There's no contracts. You can cancel anytime, and your first 2 weeks are free. Now let's recap what you get with your subscription to Simple Market Signals. You get the weekly emailed newsletter with all of the contents we just talked about. You will also receive special midweek updates when warranted. So if there is a major signal change or direction change, we're not going to wait until the weekend to get that information to you. We will send out a special midweek update when necessary to keep you up to date as to what's going on within the model. And the best fit for a subscriber for Simple Market Signals is somebody that has at least a 6 to 8 week time frame or longer. So if you're a long-term investor, you're going to love this. If you have at least a 6 to 8 week time frame that you focus on with your trading and investing, you're going to love this. If you're an ultra short-term 1 or 2 day trader, kind of a day trader, or somebody that trades within a week, Simple Market Signals might help you a little bit. But the reality is, the people that are going to benefit the most from a subscription to Simple Market Signals are those people that have at least a 6 to 8 week plus time frame that they're focusing on. And if you want even more information on Simple Market Signals and some of the strategies that you can use on the various signals, this is a very in-depth video that I will have linked in the description box below this video, along with a bunch of other videos that you may want to explore if you need additional information on Simple Market Signals before you subscribe. Also, keep in mind that due to international compliance regulations, you must be at least 18 years old and a citizen of the United States of America who is currently living in the U.S. in order to subscribe to Simple Market Signals. And again, that is just due to international compliance regulations. And to subscribe to Simple Market Signals, all you have to do is go out to the website that you see here, https://simplemarketsignals.com. It'll take you about 4 minutes to subscribe. It's that simple.